Hey guys, what is going on? Welcome back to another YouTube video. This one is about a 2 simple indicator scalp strategy. Okay, so the first indicator we want to add is the exponential moving average. So go to indicators, type in EMA. The exponential, you get a simple moving average and exponential moving average. Exponential basically just calculates things a bit faster and moves a bit more rapid, so really good to use on a lower time frame. And the simple moving average just usually works on a bit of a high time frame sort of thing. So I like to use the EMA. So add this one to your chart, and then we want to use the 50 length for the input. So 50 close and 0, which is default, just add 50 for the length. Basically over the last 50 days, where has price been? Average price. Okay, that's the first indicator. The second one we want to add is the Stochastic Indicator. And this is a really good indicator. I've been using this one for years. It works really well for pullbacks and really works good on the lower time frames. Good to scale in and good to catch a really strong trend. So Stochastic is really the one we want to use. Add this one onto your charts. For this one, we want to add a 533 input, and literally this one works the best with these numbers. Okay, I've charged out a lot. These numbers work the best. So step one of the rule, make sure you're on a 5-minute time frame. Doesn't really matter what sort of currency pair you want to be using. They all essentially work the same way, but make sure you're on a 5-minute time frame when you use these two indicators. Okay, now basically the way it works is if price is above the moving average, we're looking for buys. Okay, so when price is above the moving average, we're looking for the stochastic to cross below the 30, and this will tell us an opportunity to take a trade and buy. Now, what do I mean by cross? I mean the stochastic literally has to dip below the 30 and then cross and then come back up. So this opportunity here would not have been an opportunity. Although it crossed, it didn't cross below the 30. Okay, this would have been an opportunity when it crossed below. This would be another opportunity where it crossed below. Okay, so if price is moving above the moving averages, we're looking for a buy. And how do we look for a buy? We wait for the stochastic to come below the 30, wait for it to cross, and we take the trade. Okay, so those are the 2 steps. There is a third step, which is just confirmation. So making sure that your trade setup is a good setup. So confirmation, wait for a candlestick pattern. So I'm looking for a buy. Let's say I'm looking for this sort of opportunity here. I need to wait for a candlestick confirmation that would tell me that, okay, price is actually going to rally up. So the indecision candle, I like to call them indecision candles. Wait for an indecision candle. That will tell you that, okay, price has made its move down. Momentum is being moved down. Price has slowed down. So we had a bit of indecision trying to work out where to go next. And then boom, we had this confirmation candle that shows us, okay, price is ready to go up. Those are sort of the 3-step process, okay? Wait for a trend to form. Once a trend is forming, use the stochastic to work out the pullback. Once the pullback has occurred, wait for the lines to cross, and then wait for that confirmation candle. Okay, that's how your setup looks. All right. Now, when it comes to actually plotting the trade, we want to take, because we're on a 5-minute time frame, we need to wait for the 5-minute candle to close. So once the candle closes the way we want it to, we'll take the trade straight after that. So let's say we take it a bit later because naturally we're not going to get perfect. Stop loss is below that last indecision candle, the last confirmation candle. And your take profit is the next high, okay, which would be this one right here. Now, this is a scalp strategy, so we're not going to go for the biggest risk-reward ratios, but we are going to catch these small moves along the way, okay? This is another one right here. So once we had this confirmation candle, see after the stochastic cross, so you have to wait for this candle to close. That's literally when the stochastic cross, so we have to wait for the candle to close. Once that candle closed, we take a buy signal, stop loss below, and take profit at the next. The take profit is at the next body. So we don't go off the wick, we go off the body. So the next body high, and that's a quick 3.2. So we had a maybe not 3.2. Let's make that a 2.5 realistically. Stop loss below the candle, the wick. 2.5, 1.3. It's a quick 1.4 within 2 trades in an hour or so. Okay. This also works really well on a downtrend. So, obviously prices continue down. So from this point forward, I'll be like, okay, price is rallying down below the moving average. I'm looking for sales. How do I look for sales? I'll wait for the stochastic to give me this opportunity to sell. So we had a crossover here. Okay, so this one was not really, that didn't really give you the best candlestick confirmation. I guess this one is really what we want to look at. This one, so you know, once you get that crossover, we look for that candle. So we could have sold off that one, and take profit would have been the next body. So obviously this one would have probably got stopped out up here, but once price moves in your favor, we can set the break even. Just depends on what you would like to do. But even if we lost that trade, doesn't matter. We lost that trade, okay, no worries. Next opportunity comes right a couple minutes after. Stochastic cross, 2 perfect. These are really, really good selling opportunity candles. So shooting stars came straight after. Let's say we entered there, stop loss above here. Take profit will be the next body. And then bang, you got your 3.8. After you lost your 1%, you got your 3.8. Made money back already, okay? Nice and simple. So, you know, if I can go for any single currency pair, it doesn't really matter which one you want to use. As long as you can identify, as long as you're on a 5-minute time frame and you're identifying the trend. You know, everything might not be perfect. So this is another opportunity here. So we're in an uptrend. This is an opportunity here, but we really didn't get that simple candle we're looking for. And the candle matters because if we get a good candle, we get a good entry. If we get a good entry, we get a good risk reward. So although we had this bullish engulfing candle, didn't really give us a good entry because look how far my stop loss is, yeah? Like, I can't trade that stuff. It's too much. So that wasn't a good opportunity. But another one comes around here where sort of this stochastic did really dip, just touched the 30, but then crossed over and gave us that perfect indecision candle. You know, that could have been an opportunity right there. Stop loss below here. Take profit at the next high, okay? Didn't really give us any really more. Obviously, the moving average came closer, started to cross over, so not a good opportunity. What I will say, but what setups are really, really strong are the ones that dip below the moving average. So see how this made a trend? To the path. So this made a trend down and then it pulled back below the moving average. So if price pulls back above the moving average, it's not really the strongest setup. It can still go in your favor, but it's not the strongest setup. We want to see the price pull back below the moving average. Okay, once that happened and once we got the indecision candle, boom, simple as that. Price came straight down. We got that quick 1 to 6. You know, that's a bloody crazy scalp. And the price made its way up. Didn't really get a dip enough, low enough, and obviously we have massive, massive move down. So once price pulls back below the moving average, we're not going to trade it, okay? It does work really good for gold. It works really good for anything that is really volatile. AU can even have some good opportunities. So wait for price to make a trend. And obviously you have to look for a clear trend. That's why we have so many. That's why it's really good, because we have every single pair we can use. We're just really looking for those clear trends to be formed. So this, for example, you know, sort of has a clear trend here. So price is beginning to move down. Okay, sweet. I'm going to set my alert now. So once I see a trend form and I set my alert, let's say we set it for the top of the stochastic. Once price hits me on, so it would have hit me here. Once price hits me, I can enter, right? Or I can have a look for an entry. Now, this is a good situation here because price didn't really give us that indecision candle we wanted. Okay, but it sort of gave us that here. And although the stochastic didn't really cross at this point in time, this level is really holding. So we can sort of take it off this perfect candle. And that's a quick 1 to 3 sort of, you know, off this level here. So it is quite a simple trade to use, setup to use. It's not the best strategy, it's not the worst strategy. It does have a pretty good win rate if you're patient for those opportunities. Now, this is another one here. So after a downtrend, you know, we take the sell after this candle. This would have probably got stopped out. It depends. I think it would have. It depends how big your stop loss would have been, but probably would have got stopped out there, unfortunately. But that's a loss. Doesn't really matter. We're going to take losses. We're going to take wins. I'm just going randomly through it all. I didn't really pick any perfect examples. I'm just going to go, see, this is a really cool one here because this is a really easy trend to catch, okay? So use a moving average, use the stochastic, try it out, let me know how you go. You know, if there are really cool trades, send me a screenshot of it on Instagram. I'd like to know how it goes, but this is a really simple 2 indicator scalp strategy. If you find, you know, you can also use the RSI, you can also use the MACD to give you an extra sort of a more confluence. I don't want to use that one, I'll use this. A really cool, you know, an extra way or an extra confluence to sort of say, okay, this is a better time to trade in conjunction with everything else, but it doesn't really matter. Stochastic and moving average would work the best. So try it out, let me know how you go. I hope you guys liked this video. I hope you guys enjoyed this video. I hope this was really simple for you guys, but it's really, really simple to use. Got to be patient for the setups, but try it out, let me know how you go, and I'll see you guys for the next video.